The Dow Jones Industrial Average fell points, or percent, to 25, the S&P 500 lost points, or percent, to 2, and the Nasdaq Composite dropped points, or percent, to 7. Even with little on the trade front, Chinese shares surged to a 9-month high, bolstered by hopes of more stimulus measures from Beijing after China's state planner said the government would implement measures to further boost domestic consumption to counter the impact of a slowing economy. European shares closed just below the unchanged mark, as weak results from the troubled auto sector weighed and investor confidence in a rally that has sent stocks shooting up this year showed signs of fraying. The pan-European STOXX 600 index lost percent and MSCI's gauge of stocks across the globe shed percent. In the latest sign of global central bank dovishness, the Bank of Canada held interest rates steady as expected on Wednesday amid a slowing economy and said there was increased uncertainty around the timing of future rate increases. That in turn pushed the Canadian dollar to its worst level in about 2 months versus the greenback. The dollar index rose percent, with the euro unchanged at $1. The Canadian dollar fell percent versus the greenback to per dollar. Despite the dovish lean by central banks, the Federal Reserve reported the U.S. economy continued growing in the first weeks of 2019 amid a still tight labor market in the face of a 35-day partial federal government shutdown and slowing global growth. U.S. oil prices pared losses and Brent prices were modestly higher after data from the Energy Information Administration showed an unexpectedly sharp build in crude inventories, but a third weekly drawdown in gasoline stocks kept losses at bay. U.S. crude fell percent to $1 per barrel and Brent was last at $1, up 0.2% on the day.